I'm Dan Fitzpatrick at RealMoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Let's look at Facebook, Apple, and JP Morgan. We're going to start with Facebook here. Now, here's how the stock traded on Friday. You can see the heavy support right at 38 bucks. If you've been reading anything about it, then you know that what really happened was the institutions, the sponsors, those folks who brought the stock public were coming in to prop this thing up. Why? Well, I'll be blunt, because they didn't want to screw their clients who agreed to buy the stock at 38 bucks. If the stock was allowed to fall below 38 bucks, all those folks who were buying the stock and they said, hey, we'll hold this for the long haul, they'd have felt like they kind of got hosed. So these guys stepped in, propped up the stock. What's going to happen though when they decide to get when they get tired of buying these shares? Ultimately, the stock's going to fall. And by the way, what do you think the brokers of all those clients are maybe like telling their customers who took this stock at 38 bucks? Psst, why don't you go ahead and just sell it? I know you said you'd hang on to it for a while, but why don't we just let some of that stuff go? Make sure we don't take a loss on this. We can always buy it back cheaper. The point is, don't be left holding the bag here. I know there's pros and cons to owning Facebook, but you know what? My pro to owning Facebook would be you probably be able to get it at a lower price sometime over the next 90 days. And if not within the next 90 days, how about 92 days out from now when all the insiders can start selling? Great company, not a great price for the stock. Okay, now what about Apple? A guy was on Fast Money Halftime Report on Friday saying that he thought that Apple's best days were behind them. Maybe so. I mean, you can see that as far as the stock price goes. Its best days, at least from mid-April on, definitely behind it. But the uptrend remains. You can look here. So certainly the stock got ahead of itself. I wouldn't really say that the stock's best days are behind it, though it's easy to say that when the stock's in correction mode. Let's see that guy come back and tell us the same thing when the stock's hit the 200-day or 40-week moving average. The fact that it's gone from like a little to a lot, which seemed to be one of the biggest reasons for why the stock shouldn't continue to move, that doesn't really have much relevance to me because all I care about, I don't care about where it was before. What I care about is the fundamentals of the company. Are there still strong growth prospects? And have those growth prospects already been factored into the company? Frankly, I don't think that you can tell that by where the stock has come before. Not when you're talking about a stock that's been trading for years and years. It's very convenient to come back and say, oh, well, it was trading below $2 back in 1986. Fine, I was below 200 pounds back in 1986 too. But that doesn't have much relevance to where I am today. Similarly with Apple, dude, it's a different company in a different time. No way am I an Appleonian. I don't have a big fan base on Apple, but what I am saying is trade this stock like any other stock. And what does that mean? It means we buy low, we sell high. Right now, Apple's correcting. Nothing wrong with the company. Apple is just correcting. I'll say it again. Nothing wrong with the company. Apple's just correcting. Let this puppy continue to correct. We'll probably see some kind of an oversold bounce this week. I wouldn't buy it though. I would wait for the stock to come down, give us a big crescendo low, showing us that all the sellers have finally puked it up and now it's ready to move higher. Ultimately, you're going to get that chance. Meanwhile, just watch the stock settle in. Now, what about JP Morgan? The company continues to unwind a really public and nasty trade that's gone awry. I'm hearing $3 billion now as opposed to $2 billion. For crying out loud. Those kind of revisions on a loss are kind of reminding me of our deficit revisions for the government. This stock just continues to trickle lower. Look, at some point, JP Morgan's going to be a massive buy. Let's face it, even a $3 million, even a $4 billion loss doesn't really put a dent in the company's assets, though it is pretty darn embarrassing. Let the stock fall. Let it do what it's going to do. you know, you could get this stock down at 28 bucks or so. It's really that bad. There's no real reason to rush in and buy JP Morgan right now. Don't be a pioneer. Okay, that's it for today. A couple things. First of all, get over to Real Money Pro and subscribe, okay? There's a lot of great writers over there. I publish articles 4 days a week with 5 charts a day. That's going to give you some good trades. Also, I want you to check out my chart of the day. It's a free service over at stockmarketmentor.com. I send you one charting video a day with a good trade. But also, one other thing. Look, if you haven't taken advantage of my free 30-day trial, get over there right now and do that. Again, it's free. Like, in other words, there's really nothing to lose. When are you going to find that this day and age? So get over to stockmarketmentor.com. Take that free 30-day trial, and my bet is you're going to stick around. I'm Dan Fitzpatrick, and I'll be right back here tomorrow.